everyone. I'm Chris Kapchis, president of Chestnut Park Real Estate, and I'm happy to bring you today the October market report for the Toronto and region. In fact, I'm not happy to bring you the report. I'm thrilled to bring you the report because for the first time in a number of months, we actually saw the market respond in a very, very positive way. We've been waiting for this for some time, and it finally happened in October. As you probably are aware, there have been rate cuts from the Bank of Canada on 4 occasions in June, in July, in September, and in October. They didn't seem to get much traction, those rate cuts, primarily because the bank rate was so high to begin with that the rate cuts only had a marginal impact on borrowing costs. But by the fourth rate cut, which, as I mentioned, took place in October, the bank rate came down to 3.75%, and borrowing costs did improve. They're still high, but borrowing costs did improve. And as a result of that, we actually saw buyers getting back into the market for the first time in about 3 or 4 months, and in a way that was extremely positive compared to what we had seen in August, September, and even going back to July. So what did happen in the month of October? Well, 6,658 properties were reported sold. A year ago, we only had 4,611 properties reported sold. So year over year, there was a 44+% increase in the number of sales. That was really good news for a resale market that was extremely sluggish. And it has been for some time. What we also saw is a strengthening of average sale prices. Although the increase was only marginal, overall we saw a 1% increase in the average sale price. But the increases really took place in the 416, primarily in ground level properties, detached, semi-detached, and townhouses. Increases were not as prevalent in the 905 region, and definitely increases in average sale price were not prevalent in the case of condominium apartments. However, we did see condominium apartments increase in the number of sales as well in October. The number of sales compared to what we had seen in the past was actually quite pleasing. However, notwithstanding the number of sales, they weren't as strong as the number of sales for freehold, detached, semi-detached, and townhouses. They were up by, condominium apartments were up by a little over 33%. If we look at what happened in the case of detached, semi-detached, and townhouses, they were actually up almost 50% year over year. But still, it was a good sign as far as the market was concerned to see condominium apartments actually starting to get some traction, because they have been the weakest sector of the resale market, now going on to almost 2 years. Of course, we know the reason why. Even though they are the least expensive, the average sale price for condominium apartments came in at $721,000 in October, substantially less than detached and semi-detached properties, which I'll talk about in a moment. But even though the price was less in terms of average numbers, the people that are most likely to be the buyers for that housing type are the people that are first-time buyers, probably financially less secure than other sectors of the marketplace. And as a result, with the high fixed-term mortgage rates, that market was not getting any traction. But as I said, we did see it increase by about 33% year over year, which was a good thing. In the case of detached and semi-detached properties, prices came in very strong, up higher than the overall marketplace. We saw detached properties coming in at $1,778,000. That's a 4.4% increase year over year. And semi-detached properties came in at $1,315,000, which is a 3.3% increase year over year. So Ground level properties values are holding, and in fact, they're continuing to increase. Not the same for condominium apartments. The other side of the marketplace is supply. And what we saw in October is supply continued to increase, but not at the pace that it had increased up until October. In total, we have about 24,481 properties available to buyers by the end of October. That was up fairly substantially compared to last year, about 25%. Last year, there were just over 19,000 properties available. But the part that is going to have an impact on the market as we move forward is the amount of supply that actually has made its way into the market in October. And actually, we saw it drop down a little bit. Total number of new listings that came to the market were 14,700. That's more reminiscent of what we would see in October pre the pandemic in 2018 and 2019. But the marketplace that is completely on fire is semi-detached properties, both in the eastern trading districts and in the western trading districts. Just listen to these numbers. What happened in the western trading districts is that average sale price was $1,315,000. All properties, semi-detached properties, sold in 19 days, and they sold for 103% of their asking price. In the eastern districts, they were even more on fire. All semi-detached properties sold for $1,235,000, but amazingly, in only 13 days and at 107% of their asking price. So that's the product that most people are looking for. The only issue with semi-detached properties is the total number of semi-detached properties in the city of Toronto is only 2% of the overall supply available to buyers. And behind me, you will see a year-over-year chart that shows the changes in numbers in various categories that took place between October 2024 and October 2023. So we're looking forward now. We're getting close to the end of the year, and I think we can confidently say that we should be optimistic, perhaps cautiously optimistic, but we should be optimistic as to the direction that the market is taking. The Bank of Canada will be meeting again in December. We're certain that there'll be another rate cut, and it may be a deep rate cut. We're not sure, but 50 basis points is not out of the question, and potentially it might even be higher than 50 basis points. That will take us into 2025 with more affordability and I think more confidence on the part of the consumer, which I believe will continue to result in higher sales numbers and the average sale price continuing to stay strong. I did a little analysis before this report, and early November numbers are bearing that out. They're almost on pace to replicate what we did in October. So I'll be thrilled to do the November report for you. Before I break off, though, I'd once again like to remind you to tune into our podcast, Decanting Toronto Real Estate. Myself and Doug Gubitz analyze what we believe are the important aspects of the marketplace, and we try and do it in an entertaining way and introduce you to a bottle of Bordeaux during each one of our podcasts. So until the November report, please stay well, and thank you very much.